Hey guys, welcome back. Today we're going to dive into the forbearance programs in a little bit more detail. I've had the opportunity to speak to a lot of you who have reached out to your lenders and been offered different type of forbearance agreements, and I'm going to go into detail about those today to provide you a little bit more insight on what is being offered. Before we do that though, I'm Jeb Smith with Coldwell Banker Realty here in Southern California, and I want to say thank you for taking the time to watch. A lot of you guys have reached out to me recently, provided a lot of useful information, and for that I want to say thank you. If you're new to this channel, do me a favor, hit the subscribe button. If you're interested in real estate at all, mortgage at all, my goal here is to help educate you, keep you up to date on what's going on in the real estate world, provide you a little bit of insight to help you make informed decisions. And if you like this video, hit the like. Again, it helps more people see it, which is ultimately my goal. But let's dive into the forbearance programs that are currently being offered. Again, a lot of this came from you guys. And it's going to be an update to my video I did on Friday. So if you saw that video, bear with me a little bit and I will get into the additional things that are out there to help further that conversation if you're going to talk to your lender. Now, keep in mind that this doesn't just apply to mortgages. If you are having an issue paying credit cards, if you're having an issue paying your car payments, your student loans, any payment at all, if you're having trouble paying it, this type of agreement applies to them. Now, what I'm talking about today is primarily mortgage payments, but again, you can have this conversation with every single one of those companies that I just mentioned, and chances are there's some sort of deferment, some sort of forbearance they will offer you to allow you to skip some payments so that you're in a financial position to pay the necessities now, food, ideally housing, and family, right? And those, and clothing, of course, but if you can't leave your house, you can't buy clothing. But nevertheless, the idea is that you want to take care of the basic needs that you have now and then allow that deferment to happen later. So as we talked on Friday, the primary two options at that time were that you could essentially miss 3 months of payments. They were allowing a 90-day deferment. And when I say they, I'm referring to most lenders out there. Now, some lenders are offering different types of programs, but for the majority of us who have reached out, or majority of you guys who've reached out to me, the programs are essentially the same across the board for the most part, depending on, regardless of who the lender is. Now, if you've heard something differently than what I'm offering or giving up here, do me a favor, reach out to me, let me know about them so that I can do an updated video and provide that insight to you guys. But, a lot of people have U.S. bank loans. A lot of people have Bank of America loans. Now, and those are where the majority of these are coming from. I'm with Mr. Cooper, so I will start with there. I actually talked to Mr. Cooper this morning, my lender, and talked about the forbearance. And at this point, I'm not late on my payment, right? So I've made my March payment. My April payment will be due starting tomorrow, actually starting on Wednesday, and won't be late until after the 15th. And so what they told me is, hey, look, you're not late yet, so why don't you reach out to us if you find yourself in a position where you're gonna, where you think you're going to miss your payment. So because I haven't missed a payment yet, and even though I'm in real estate and real estate is kind of on hold at the moment, clearly there are some things selling and people buying, but for the majority it's kind of on hold. And so they told me to call back. They said I could do a deferment today, but why don't you call back at a later time and talk to them then? So that's what I did. But as of today, what they were offering was 90 days. They allowed me to miss a payment for 90 days, and in the fourth month, all 3 payments plus the 4th month were due. And so this is kind of what I spoke about on Friday with regards to one of the options that were out there, and this is the option that was out there, right? So this is all Mr. Cooper is supposedly doing at this time based on my conversation with them. The other option that I mentioned on Friday was that there were companies out there, lenders out there, allowing you to make a partial payment. So if your payment was, say, again, I'll use the same example I used on Friday, $3,000 a month, and you can make a $1,500 payment for the next 3 months, then essentially you're going to owe $4,500 plus your 4th month payment, that $3,000, due in the 4th month, because you made half payments each month. Each half payment, you got to take the half that you didn't pay and pay that along with your full payment in the 4th month. So for most people, that's not really an option, because if they are unemployed, they don't have a job, depending on when the economy lightens up. As of yesterday, it was April 30th for the social distancing, which means probably not a lot's going to change in the job world, in the finance and mortgage world for the next 30 or so days. which means that lenders are probably going to have to extend these terms. But for now, that's what they were offering. And for the majority, that's not going to work. Now, somebody did reach out to me that has a U.S. bank loan, and they mentioned that they spoke to their lender on Friday. And on Friday, the option was a 90-day deferment, and they spoke to their lender again today to ask additional questions. But anyway, that 90-day deferment went to 180 days. So now, just in 3 days over the weekend, that 90-day deferment has now gone out 6 months. Now, what happens at the end of the 6 months, I don't know. And that's a conversation you guys need to have with your lender. But what I'm hearing from other people out there who have talked to their lenders is that some lenders are saying, hey, look, we're requiring all payments to be made in, say, the 4th month, but in the 4th month, reach back out to us because we might modify your mortgage. Now, what that modification or restructuring means, I don't know, because there's really been no insight on that. Nobody's reached that point yet because we're all just starting this together. We're all in, the timeline together, if you will. So we're all going to reach that same breaking point, if you will, at the same time, which is going to be that June 1st or so date. And so what happens with a restructuring of a mortgage? I have no idea. I mean, I would imagine they're probably going to allow you to set up some sort of payment plan where you pay it over the course of the loan, each month added to your mortgage payment. But again, I don't know. And that's what, kind of the unknowns are out there. And there's a lot of people scared to take the deferment because they're like, well, I can't make all of these payments up in the 4th month. But what I would tell you is that currently, that's your best option, right? If you're in a position right now where you haven't made your March's payment, it's late as of tomorrow, right? And so in order to avoid credit lates and in order to avoid anything like that, you need to get yourself on a deferment so that it doesn't affect your credit negatively. Now, that's the one thing Mr. Cooper did say when I spoke to them is this is not going to hit your credit in a negative way. Now, what happens in month 4 if you're not able to pay all 4 payments? They're saying, well, at that point, then we're going to refer to your credit as a delinquent late, right? They're going to make it 1 month for all 4 payments that are due. If you're not able to pay it in the 4th month, they're going to hit your credit with 1 late. Well, chances are if you're not able to make it in May, all of those payments, that's going to roll over and continue to roll over and could be a credit situation. So, the most important thing is take care of yourself now and then figure out the details, right? So if you're able to defer now, if you're in a financial hardship now, make sure you're communicating with your lender. Have that conversation now so that, they have you on file, talking to them. They can not report negatively to your credit because, again, this is twofold. Missing your mortgage payments is one, and hitting your credit is another, right? You still want to hold your credit as good as possible so that you have it for if you need a loan, if you need to refinance anything down the road that that could benefit you with having good credit. You don't want to affect it now. So that's really the big difference in Friday versus today is that it seems like, there's now some lenders, it seems to be U.S. Bank who is doing this, that allow a 180-day deferment or forbearance versus a 90-day deferment. So again, as I mentioned on Friday, my guess is as lenders continue to roll out programs and this continues to, go on, if you will. I mean, right now, again, we got pushed out till April 30th. My guess is lenders will have to come up with more options. They're going to have to come up with different things to allow you to miss payments now and make them up on the back end, because most people aren't going to benefit from missing 3 months and then having to come up with some huge lump sum at some point in the future. So if you're in a position where you're continuing to make mortgage payments and you're not worried about it, great. And one thing to keep in mind, and this was brought to my attention too this morning, is that if you have impounds, that means if you currently pay your taxes and insurance as part of your mortgage, make sure when you talk to them about deferment, forbearance, that you have that conversation about property taxes and insurance, because that information needs to, you still may need to pay that. Otherwise, your property taxes aren't going to be paid, and that's a whole different animal added on to your mortgage payment. So make sure you're having the conversations in addition to your mortgage payment and your credit about property taxes and insurance if you're currently impounding per month. Some of you guys have FHA loans and you pay mortgage insurance premium as part of your payment as well. So keep that in mind. Also have the conversation about that. Is there interest being added onto this stuff at the end? How's it affecting me? My monthly payment, is my monthly payment going to change? All of that good stuff. So again, as I get additional information from you all who are gracious enough to reach out to me, and from conversations I have with other people, I will continue to do videos and provide you with as much information as I can to help you guys put yourselves in the best position possible. So as always, I appreciate you taking the time to watch. Thank you for sharing this with your friends and family, and I look forward to seeing you again soon. Have an awesome day. Bye-bye.